Guys, let's get straight to the point. While you're watching this, markets are shaken by US. Israel strikes on Iran and the death of Ayatollah Khamenei, and investors worldwide are flipping into a risk-off, safe haven mode. In this context, Bitcoin first crashes hard, then bounces back above $67,000, erasing almost the entire drop within 24 hours. And here's the key point. XRP does not live in a vacuum. Any major geopolitical shock in the Middle East instantly feeds into risk sentiment across all assets, stocks, commodities, and of course, altcoins. Right now, the world is both afraid of escalation and simultaneously looking at crypto as a hedge against chaos and sanctions, including inside Iran itself, where annual crypto activity has been estimated around $7-10 billion. That's the backdrop. Now let's see where XRP sits inside this chaos, and what is actually going on with it from a technical and on-chain perspective. At the start of March, XRP is trading around $1.371.4, showing a daily gain of roughly plus 27%. Over the last 24 hours, the coin has rallied more than 12%, and its market cap has climbed back to about $142 billion. After February's waterfall move, the market is starting to retrace the dump and forming the first somewhat stable bullish impulse. At the same time, the global backdrop is nervous. Bitcoin around 67.7 tick, investors torn between fear over Iran and the urge to hide in crypto and gold. For XRP, this means one thing. A sharp BTC dump can easily break any local setup, but as long as BTC holds, XRP has room to play out its own drivers. XRP's fundamentals right now are not loud. They're structural. Ripple and RLUSD. The launch of the regulated stablecoin RLUSD is one of the key fundamental events of late 2025, early 2026. It strengthens Ripple's role in real payment corridors, and XRP in that scheme acts as a bridge asset and liquidity source. Fiat gateways and Mercado Pago. Major payment players continue using XRP in cross-border transfers, cementing its role as a workhorse for fast international transactions, not just a speculative token. Ripple's deal with Hidden Road. Gaining access to clearing volumes of about $3 trillion per year deepens the institutional layer around Ripple and creates a base for new products and partnerships. All of this is not one headline pump, but a long-term foundation, which starts to matter when technicals open a window for it. Over the last 24 hours, XRP chatter on X, Twitter, and Telegram has clearly picked up. People are talking about the 12% plus daily pump and the market cap returning near $142 billion. The discussion is shifting away from dead alt versus to the moon and more towards levels, on-chain data, and whale behavior. Overall sentiment is neutral to bullish. The market is not in hysterical overbought territory, but nowhere near capitulation either. This is exactly the type of zone where traders start digging into details instead of blindly longing everything. Technical picture. From waterfall to base. From late 2025 to early 2026, XRP fell more than 60% off its peak around $3.65, a full-blown deep correction. Here's what we see on the daily chart. A drop from $2.3 down to $1.25, $1.3, where price repeatedly found support. Sellers never managed to firmly hold the market below 1.25. XRP is now trading above 1.3, 1.35, which looks like a minimal stabilization after the shock. Daily RSI is hovering around 40.45, meaning the market is neither deeply oversold nor overbought. There's room both upwards and downwards. Volumes and news will decide. XRP is still trading below the 200-day moving average, which formally keeps the midterm trend bearish. The 1.25, 1.35 range has acted as support multiple times. The failure to hold below 1.25 is an argument in favor of a local bottom forming. That's why many traders now view 1.25, 1.35 as a potential bottoming zone and 1.35, 1.4 as the initial base for a possible reversal. Key levels, where the battle happens. $1.25, $1.3, the main support area with heavy liquidations and aggressive buy-ups in the past. Losing and closing below 1.25 opens the door to deeper downside. As long as that doesn't happen, this is the bull's defense line. Resistance. 1.4, $1.45, the nearest strong resistance. A breakout and daily close above would be the first signal of transitioning from a range to an uptrend. 1.5, $1 a key level near the 61.8% fib retracement of the last move. 1.5, $3 the zone above which the path opens towards 1.7, 6, 1.8. On-chain data show that around 1.85 billion XRP were accumulated in the 1.7, 6, 1.8 range, with a notional value close to $2.8 billion. That's where large historical buyers sit, so you can expect serious resistance and profit-taking if price reaches that area. Whales and on-chain. Who bought the dip? On-chain stats tell a clear story. Large wallets did not run away on the dump, they added. Addresses holding 110 million XRP increased their balances from 3.7 to 3.8, 1 billion XRP. Wallets with 100 million 1 billion XRP grew from 8.3, 5 to 8.4, 6 billion XRP. In total, that's around 150 million XRP bought within a couple of days at roughly $1.35, or about $200 million in capital. In simple terms, big players use the dip as a buying opportunity, not a signal to flee. This strengthens the case that a deep continuation of the dump is unlikely without a major external shock. Forecasts and final XRP scenarios. Analysts and AI models are cautiously bullish on XRP. No fairy tales, but also no XRP's dead narratives. Models like Grok see an early March price range around 1.4, 6, 1.5, $4, with a base case near 1.52, assuming no major new shock hits the market or geopolitics. AI forecasts at the ChatGPT and Claude level give XRP a working range of $1.4, $1.8 for March, with potential to push towards 2.2 if BTC stays above 67.7 TIKE and Ripple avoids regulatory bombs. More optimistic takes talk about $2.54 by mid-2026, but that is clearly a best-case path. 3 scenarios for XRP over the next few months. Base case. Most likely. BTC stays in the 60-75K corridor without brutal crashes. XRP trades in a $1.3, $1.8 range, dipping toward 1.25 on corrections, and testing 1.5, 1.6 on rallies. The market gradually digests the Iran situation, and Ripple's fundamentals, RLUSD, hidden road, payment corridors, keep interest in XRP alive. Bullish scenario. Iran tensions do not escalate into a large-scale war, markets move out of full risk off, and BTC holds, and then breaks above 75K. XRP cleanly breaks 1.45, 1.53, holds above 1.5, squeezes shorts, and moves to test the 1.7, 6, 1.8 region, where big historical volume sits. With supportive news and liquidity inflows, a move towards $2 and above becomes realistic, albeit with heavy fighting around 1.82. Bearish scenario. Geopolitics bite hard. The Iran conflict escalates. Markets swing into strong risk-off. BTC drops below 6 tick, and fear plus liquidations hit all altcoins. XRP loses 1.3, breaks 1.25, and holds below. That destroys the current bottoming structure and opens the way to much lower levels. In this case, even strong Ripple fundamentals temporarily move to the background, and the market runs on emotions and panic. In the end, this is the picture we get. XRP is not living on its own right now. It is being pushed at the same time by geopolitics around Iran, overall Bitcoin sentiment, and Ripple's real fundamental moves. We see that large wallets are not running from the market, but adding on dips, the technicals are forming a base in the 1.25-1.35 zone, and above that, there is already a ceiling built from the 1.4, 1.5 levels, and then 1.7, 6, 1.8. There are three scenarios. In the base case, XRP oscillates between 1.3 and 1.8. In the bullish one, it breaks 1.5 and goes to test the 1.82 area. In the bearish one, it loses 1.25 and goes hunting for a new bottom on the back of escalating conflict and broad risk-off. And here the key is not some magical forecast of what the price will be, but how you approach it yourself. Watch levels, volume, whale behavior, and news flow, not just emotions in your feed. I've done my part. I've shown you where XRP is right now at this point in the cycle. The rest is up to you. Are you on the side of those who buy fear and think strategically? Or on the side of those who will dump the coin again on the very first bounce?